up, we have Josh Linder. Josh Linder is a principal value consultant at OpenText, the leader in information discovery. He has over 20 years in cybersecurity, information management, marketing, and business strategy experience. Josh previously advised security startups in the areas of marketing, business development, sales, and architecture. Please join me in welcoming Josh to the stage.
Thank you, Patricia. It's great to be here today. It's great to be here this afternoon for folks in the Eastern time region, and for other folks, good evening and also good morning. Before I get into my presentation, I do want to just mention that logos, references, and screenshots are property of the trademark holders. I do use a number of industry examples because I think it illustrates what is happening in the banking industry today. And also, these are going to be opinions of mine and not specifically of OpenText. So without further ado, we're going to be going through a couple things this afternoon. We're going to start with a brief introduction on OpenText to give an understanding of whom we are and where we participate in the market. I'll give a brief history of banking, so I think it's very, very interesting where we've come from, where we're going, and moving into this new state of banking. Then what all of the folks are interested in to hear today, which is really about what are solutions and what can banks do, especially through this time of transformation, and finally, how to benefit. So who is OpenText? For those who do not know us, we're one of Canada's largest software companies. We do over $3 billion a year in revenue. We have over 15,000 employees across the world with many users. We are the information company. So for those in banking, you may know us through our brand names like Documentum. You may also know us with regard to our industry-leading technologies like TeamSite and Extreme. You may also know us from how we interface with SAP. There are many ways that we participate in this market today. 9 of the top 10 commercial banks and 9 of the top Fortune 500 life insurers. You can see as well, we are very, very successful in the world of insurance, both stock and mutual. Health is a big and growing area for us, as well as energy. As I mentioned, we have over $3 billion a year in revenue, 15,000 employees, 120,000 customers, and also 90% of the Fortune 1000 companies. But for today, we're going to focus on banks. And what is a bank? So I ask those of you who are in attendance, and this is not a trick question, but if we think to ourselves, really, what is a bank? In today's world, it's made up of 3 things: relationships, trust, and also location. Now, what has happened with relationships? Relationships have transitioned to personalization. How do we know? How do we understand our customers, our clients? Trust, the blockchain has become very, very important and will continue to evolve. And also location. Now, location is going to be a very interesting piece of our discussion today. And location is being, in many ways, replaced by other means for convenience and resilience. We've seen over the last 18 months what's happened. Relationships have become more important. Trust absolutely is growing, but location is on the decline. So to answer my own question, what is a bank? Banks build customer trust for long-lasting, profitable relationships. So let's take a step back before we move forward. As we see on the left, many of us, especially of my age, remember these very large marquee branches. The funny thing about this is that not much has changed. Banks from 1965 are similar to those in 2021 in the physical branch. What's also interesting about this image is that the small vault or safe in the lower left is actually very similar to today, but is a microcosm of a much larger physical location that has been digitally transformed. That's been digitally enabled with electronic vaults, electronic safes. Now, on the right side is not necessarily today, but if we look back even just a couple of years, organizations like Wells Fargo saw that a very large marquee branch was going to be disrupted and took the best pieces and parts of a branch and shrunk it down to 1,250 square feet. This is actually a real live location in Washington, D.C. People can go there. It was started out of a think tank with the NCR Corporation, and it has grown into something that Wells Fargo continues to draw from as they expand not only their physical presence, but also their digital interactions with their clients. So digital disruption and physical disruption were a long time coming. I'm based in Atlanta, and we remember a couple of years ago, South Trust Bank moving to Wachovia, and then finally to where we are right now, Wells Fargo. But I asked the audience, how did this impact customer loyalty, client satisfaction, and customer engagement? And my answer is things have changed pretty significantly. And also, just to give a shout out to Truist Bank, what we've moved from is investing heavily in those physical locations to now mobile and online. And we're going to talk about that in a couple of moments. So what's the takeaway? Traditional banking as we know it, physical banking, has been transformed. So today, the new state of banking, where geography matters and where it matters less. There are four concepts I'm going to go through in the next couple of minutes. First is that banks need to become digitally native or digitally first. The second is that we can't just necessarily walk away from our physical locations. We still need to embrace them. We need to look at our geographic footprints. The walls come down. Focus on profitable products and customers. And also something that has become a very recent concept for banks is embracing social causes. It is a critical way of connecting with your clients, attracting new customers, and also retaining. So digitally native. One of the things that we see as we work with banks is that it appears every single one in their investor relations talks about the investments that have been made and also the successes from investing in mobile apps. What we've also heard from our customers is that net promoter scores, customer satisfaction, is being driven by the digital interactions. This is the primary way that people are interacting with your bank. And it really is the full power of a branch in your pocket. Moving to the next step, geographic footprint. One of the key things to understand that probably many of us do is that there are opportunities to embrace a geographic footprint that is well beyond where banks started. Now, obviously, bank charters dictate where banks can play, but for those who have national charters, there's a tremendous amount of opportunity. And we've seen that in our customer base with regard to lending and private wealth. The other thing and final note here is that one of the challenges that we've seen from the regional and the super regional banks is that there's a break point. And what I mean by that is that for people as they graduate from university or as they move from town to town or from state to state or across the country, focusing on the US in this example, one of the key things that we see is that they move banks. With a stronger digital footprint instead of a geographic footprint, it now allows banks to retain their customers and grow those lifetime relationships. Well, how do they grow those lifetime relationships? Profitable products. And again, another shout out to a regional bank within the Southeast regions. They recently acquired a home improvement lender. This is one of the key areas that we're seeing, how to evolve past the core products that may be languishing. Savings accounts are not really offering the benefit that they once did. Even high yield savings of a little over 1% is not going to attract nor retain customers. And also, as we know, there are limitations on investments and insurance. Those have to be often done by third parties, even if those third parties are within the bounds of the bank themselves. So I think really the key thing is that evolving profitable products and improving those is an excellent way for banks to, if you will, retain in the face of disruption. But the final thing that is super important is really social alignment. And we see this, we hear this in every industry. Embracing social causes is an excellent way to grow business. Well, in banking, This has been something that has been a long time coming. There are many people who are skeptical of traditional banking products and traditional banking companies, banks. So these new companies, these new disruptors like Capway and Greenwood are two great examples of organizations that are disrupting. Now, they're not the first. Looking back only a couple of years, Green Dot, served by American Express, and Bank of Labor, which is probably the least known of these, have definitely gone after different groups of people and have, if you will, attracted them and embraced them. But they haven't offered necessarily the innovative and the comprehensive products that Greenwood and Capway, I would say to a slightly lesser extent, plan to do to retain these customers throughout their lifetimes, that they feel like they're being listened to and that their needs are being addressed. These are key disruptors in the market today. So the takeaway from this small section is that location is no longer the most important thing. Really, products, social cause alignment, and as well, looking at how we can expand beyond our small geography that we participate in. But what is the solution? The solution is one of disruption. I think oftentimes we'll see that banks want to disrupt. They'll do things that are really the investments that they've come to evolve from their current state. But I think the critical aspect that is maybe not oftentimes focused on enough is looking at the activities and also, if you will, forecasting those over the lifetime of banking customers. So for those who work for financial institutions, they're well aware of spending, saving, investing, and borrowing as really the four key. These are really how a bank operates. But how do you then project that or overlay that on lifetime events? And then how do you also look at the different banking products? I didn't say this a moment ago, but I'm going to say it now. Credit card usage is consistent, but the credit card balances over the last year and a half have declined significantly. People have paid down their credit. They're spending less, even though, if you will, the transaction volume might be stable. We also know that mortgages and refinancing have absolutely exploded. Now, automobile loans, there's a bit of a dichotomy. People were purchasing vehicles, and now we're at a specific point in time in which people can't find vehicles, that there's a tremendous run on vehicles and there's a limit to the inventory, but that will pick up. Time accounts, CDs are on the decline, and investments, like I said, have significantly expanded. So for banks out there, what I say is that categorizing which method is best to service and looking at that through a technology lens, in person, online and mobile, and telebanking. So this is a term that I haven't heard much about, but it is something that I believe will come to fruition in the same way we see telehealth. And it is really the ability to interact with banking clients via video, via phone, via Zoom in different ways and shapes and forms, and especially through many different types of activities. But banks can't just jump into this without really understanding the different use cases and the different phases of their time with customers, whether it's attraction and customers signing up for financial products, client onboarding, the ongoing relationship management, and then service recovery, which is something that I'm going to speak about in a couple of moments that is super important. So first and foremost, monitoring and refining digital investments. Again, a shout out to Bank of America. They've seen some very significant increases in the use of their financial products or digital products. But where have they seen that increase? They've seen the increase in sales. And this is something that is important to banks because it's not just about the efficiencies and cost savings. Finally, over the last 18 months, we've tipped the point from utilizing the digital products for convenience purposes to now actually instantiating or opening new products. From a technology perspective, migration movement to the public cloud has given banks what it's given every industry, which is elasticity. You can build, they will come, and they will continue to expand. And really the key takeaway from this is that the realization from decades of work is finally here. And this is also driving customer satisfaction with net promoter scores. The ability to interact in a frictionless fashion with your bank is something that makes you happy in good times and also in challenging times. But remember, digital is only part of the solution. We still have to focus on the people. And good communication is a bank's link or its lifeline to its customers. During BAU, during difficult time, we have to use empathy. With digital products, empathy is oftentimes more difficult to get across. When we're on the phone with somebody, it can be a more difficult type of empathy that is communicated to them than if they're in person because of that nonverbal communication that has declined. But when things are good, how do we then use that to expand the relationship using digital products? I should also say that during outages that we've seen from time to time, as well as urgent needs and panic situations, we need to solve the challenge as quickly and effectively as possible. Digital can be our best friend, but digital also can present a number of unique challenges. So what if we have a problem? And my belief is that we need to align service recovery with the new way of banking. If we've embraced the customer, if we've attracted them, if we've onboarded them and we're servicing them, how do we use digital in a geographic free way to be able to meet their needs, even when it might be something that is not necessarily going to be profitable for the bank at that exact point in time? So the key takeaway is solve for the difficult times, not just convenience. So I thank you for your time, and I'm going to wrap up with what should we do? First and foremost, recognize a new geographic and social paradigm in banking. Approach the banking world with open eyes, free of physical locations. Of course, like I said earlier, within the bounds of banking charters and legality to do business. Focus on profitable products and long-term customer relationships. Review and improve your digital touchpoints with an eye towards customer communications, not just over-focusing on user interfaces and mobile applications. And finally, support your customers during good times and challenges, especially in a location-free world. I thank you for your time. It's been great to present to you, and I wish you a great conference.
What a great session. Thank you, Josh. That's it for today's general session. At 2:30 Eastern Time, the tracks will begin. We have 3 tracks today: marketing, onboarding, and engagement and retention, as well as the innovation stage. We'll be taking a deep dive into industry trends, and all tracks have world-class speakers, so you can't go wrong. Enjoy.